Bad news seems to be piling up for the Indian economy because Morgan Stanley has slashed India's growth forecast for the current fiscal to 7.6% from 7.9%, and for the next fiscal, that is FY24, it has trimmed India's growth forecast to 6.7% versus 7% earlier. Now, the surge in oil prices and the slowdown in global growth due to the lockdowns in China and the less fiscal impetus and the rate tightening cycle that developed markets have embarked on are some of the risks that threaten to derail the global growth, and that is something that will have an impact on India's growth as well. In fact, Indian economy is more vulnerable to oil volatility due to its high dependence on oil imports. The global slowdown will have negative ramifications for India's export growth as well, and the negative news flow could worsen India's economic indicators going forward. Remember, India's inflation is hovering around 17-month highs of 7% or thereabouts, and Morgan Stanley expects India's inflation to average out somewhere around 6.5%. Morgan Stanley expects the RBI to front load interest rate hikes and hike rates by 50 basis points each in the June as well as August monetary policy meetings. Thereafter, it expects the central bank to hike interest rates by 25 basis points. Now, given the kind of sell-off that we have witnessed in the Indian markets, it seems like investors are selling in May and going away. Remember, the Dalal Street has seen its market cap getting eroded by over 30 lakh crores in the matter of a month, and it's not just a local issue because global markets have also been under a fair bit of pressure, especially after the US inflation figures for April indicate at elevated inflation, and it is hovering above that 8% mark.